What's up everyone, welcome back to JBTV. I know it's been a while since I dropped a video, but today I'm here and that's all that matters. I want to talk about a home buying process today, and I've touched on this in my videos on Instagram as well as on my TikTok. And if you want to follow those platforms, it's just my first name dot my last name, so Julian.Buduri. And as always, I appreciate your support, and please let me know how I can support you, support your business if you have a business. Now, on those videos on my Instagram and TikTok, it's just small parts on how to really purchase. And in this video, I want to elaborate more on that. So let's start with the reason for purchasing. You know, many people have different reasons they may purchase a home. Some people purchase a home to live in. Some people are investors. Some people purchase them as a gift to their kids or parents, so on and so forth. Let's start with purchasing the home as a primary residence. So there's different ways you can go with this one. So you can purchase the home cash. Of course, it has to be traceable cash, meaning, you know, if your mortgage lender is pre-qualifying you, they have to trace the money, where the money came from. If it came from as a gift from a family member, if it came as a payment from work, you know, whatever it is, it has to be cash they can trace. Or you can get a mortgage loan. Now, mortgage loan also have different criterias of, you know, different type of loans they can give you. One, which is FHA loan. FHA loan is a government loan which gives most first-time home buyers like a break in terms of being pre-qualified. You know, if your credit score is low, they can go as low, I believe, as 580. Don't take my word for this. Of course, you want to talk to a professional lender. So besides an FHA loan, you can also get a conventional loan, a USDA loan, or a VA loan. Of course, VA loan is for military personnel or retired military. USDA loan, so not a lot of homes or areas can qualify to use a USDA loan. So I would recommend looking into USDA to see if you qualify, or if the areas you want to be in qualify for that loan. And then there's conventional loan, which is a lot more private. Conventional loan is not backed by the government, meaning there's no mortgage insurance. But keep in mind, conventional loan, you will still pay a mortgage insurance if you pay under 20% down payment. So for conventional loan, of course, you understand your credit score gotta be a bit higher to qualify for this loan. You can still choose to do a 3% or 3.5% down payment, but you have to understand, until you build a 20% equity in the property, you cannot drop the mortgage insurance. And I know that's a lot of information to grasp. So if you really don't understand it, just go back and just kind of listen to it twice. Or if you have any more like specific questions, of course, you can DM me on my Instagram, Julian.Buduri. So each and one of those loans will qualify you based on your income and based on your debt to income ratio, meaning they check how much money you're bringing in and how much money is going out, and that'll determine how much money you can qualify for. So, and this is why most of the time we encourage clients to get pre-qualified before they can ask us to go look for homes, because in that time we might be wasting time looking for $1 million home while you only qualify for 150K, or we can be looking for homes that are 150K while you qualify for $1 million. And of course, I'm not saying just because you qualify for a certain amount then you gotta use all that amount. No, those are just hypotheticals. Now you understand that to qualify for a home, you need a good credit score and a source of income. Now, on the source of income, most mortgage lenders will qualify you looking at the last 2 years of your job history. Now, most people will ask, what if I worked at a certain job for like a year and then go at another place for another year? Is that a problem? That's not gonna be a problem. The only thing they look at is if you took breaks in between. For example, you were working at a certain place and then quit or stopped working there and then just sat down and didn't work for a while and then go to another place, then that would be a problem. If you skip jobs, like go here and then leave and then go work there, if you're still in the same line of work, everything is still good. For example, let's say you're a teacher at a certain school district and then get promoted maybe at another school district and leave that job and go be a principal, for example. It's still the same line of work. You're still in education. So that's not gonna be a problem. And of course, there's two ways to this. If you're working on a W-2 or if you're working on a 1099. 1099 meaning that you're self-employed and you have to file your own taxes and so on and so forth. The pre-qualifications are the same in this case, meaning they look at 2 years of your business and qualify you based on how much you're bringing in. Of course, they look at your bank statements and they look at the consistency of your business and how much money you're making on a consistent basis for the last 2 years. After understanding that you need a good credit score and a job history, there's one more thing that you need in order to kind of complete everything, and that's your savings. You want to have a good savings amount in your bank account that's gonna cover your closing costs as well as your down payment. Now, your down payment will vary on how much you want to sacrifice. The minimum is about 3.5% down payment on a home. This also varies on which type of homes you want. For example, if you purchase a brand new home, a lot of times brand new builds, they have their own lenders and they have their own title companies, and they will give you a break in terms of how much you're paying closing costs. So sometimes you might not pay any closing costs at all if you purchase a brand new home. If you purchase a pre-owned, you're most likely going to pay your closing costs. And just to summarize, the first steps of purchasing a home is to get pre-qualified if you do not have the cash in hand to purchase a home. And of course, you want to talk to a professional mortgage lender in order for them to thoroughly and elaborate and explain everything from what type of loans you're getting, FHA, conventional, VA, USDA, and all the way to having a good credit score, having a good job history, and of course enough savings to cover your down payment as well as your closing costs. Now, this is part one to that. I'll be dropping a part two going in more in depth of now you've been pre-qualified, now we're looking for a home. And I'm gonna talk about the differences between purchasing a pre-owned home as well as purchasing a brand new home. Thank you guys so much for watching. I appreciate your time. I appreciate your support. Please keep an eye out for part two. And if you have any other questions, any other things you'd like to know about, please comment below or DM me, and I will see you next time.